Trading simulators, are they good or are they bad? Now, it's a very important question because they can be your best friend or your worst enemy. Let me explain. So first of all, I do encourage everyone to start on a demo account or simulator before you trade with real money. Absolutely. I understand not everyone agrees with me. That's fine. But I do love them for that. But there is a big problem, and this problem, if you use this incorrectly, and it's kind of annoying. Most people want to do it. I'm about to explain to you. And I did it, and it ruined my trading for quite a while. And so let me explain. On some of the simulators, they have a function that will allow you to play back the market. So I'm not talking about the demo accounts or the simulation where you can watch the market in real time. I think those are great. And like I say, you can test things, you can practice without risking real money. Fantastic. And then there's market replays. Now, these market replay functions, I know NinjaTrader has one. I'm not sure about other charting platforms, what they offer. And it's a cool function too, by the way. So there's lots of good stuff here. And what that allows you to do is, if you aren't able to trade during market hours, let's say you got a full-time job, then you can pull up the market replay function and it will replay. In other words, it records the market in real time, and then you can replay it after you get back from work or whatever when you have time and get more practice. And that's so important. You got to get your reps in. You got to get your practice in. And this is one way to increase the number of hours that you have under your belt. And that will lead you to hopefully being more successful more quickly, get more experience. So in that way, it's fantastic. So what's the problem? Why do I say that it can be such a problem? Well, let me tell you from experience. All right, so you see this market moving right now. And here's the issue. Markets have a rhythm, and they can speed up and they can slow down. I'm sure you've seen charts where you're watching the chart during the day and it's going real slow. Well, kind of like this right now. And you get bored to tears and your mind gets distracted. And, if you're anything like me, then you start checking your texts or your emails or got Netflix on in the back or, I don't know, looking at Instagram or TikTok or something, playing I don't know what people play these days, Candy Crush Saga. But anyway, you do something to distract yourself because it's so gall darn slow and you want it to speed up. Well, in real life, the market's going to go as fast as it goes. And then other times it will speed up. Other times you'll get in what's called a fast market condition where it's so fast and so quick it's almost hard to get your orders in. Well, we all need to internalize that rhythm of the market and be able to evolve and adapt with it, go with the flow, so to say. And even when it changes, be used to that. Think of this. The human body is a rhythm machine. We've got inhale, exhale. Inhale, exhale. That's one of the rhythms of our body. Another one is our heart, pumping blood. And if you exercise, whatever, it goes faster, and then it can slow down again. Brain waves. You got brain waves. All these things oscillate. Now, one of the keys psychologically to making money in the markets is to get in tune with that rhythm, with your brain and your mind to get in tune with that rhythm, so that you don't get too distracted, you don't get bored. And we've got techniques to help you with this if you're interested. But you got to get in touch with that rhythm. So now let me bring this over for you. I'm going to bring over a little thingamajig so I can make this market go faster on the market replay. Okay, I can make it go faster. I'm sorry, you can't see that. Okay, so here's what we're doing. All right, so you can see I've gone back to April 5th. So you can go back to historical data. And here's the deal. Look, I can speed up the market. And now see how much faster it's moving? I can go 100x. I can go to 500x. Oh, wow, 500x. Can we go to 1,000? We sure can. Oh, my gosh. Now it's moving really fast. Okay, so why are people tempted to use this tool, first of all? So they're tempted to use it because when they're practicing, they don't want to be bored. And I get that. Totally get it because I did it too. But the problem that comes in is when you go to trade the real market, it's not going to move like this. And you are not going to develop an internal rhythm that can match, first of all, really two things. Number one, this will actually give you a bad habit. They say practice makes perfect. No, perfect practice makes perfect. Imperfect practice makes you worse. I would categorize this under imperfect practice. Yeah, you're looking at the market. Yeah, you're looking at if you got some indicators on there or whatever. And again, nothing bad about looking back historically to, look at your system and see how it's worked in the past. That's fine. But if you're practicing real-time trading like this on a simulator after hours, and you speed this up, you are going to do harm psychologically and, believe it or not, even physically when you go to trade the real market. You've got to develop the habits of developing that patience, and as the market speeds up and slows down, get in line with that. It's almost like Tai Chi. You've seen probably Tai Chi, where you get in, it's a martial art, but it's considered a soft martial art. And it's where people connect with the opponent's energy and go with it. That's what we're doing with the markets, the market is moving, it's flowing, it's oscillating, it's trending, it's not trending, it's going sideways, and we just get in tune with that energy. We feel it and we connect with it, and we go with the flow, literally go with the money flow. And so that timing is very important, both to get used to sometimes being bored. Learning to be bored or learning to trade slow, boring markets is a part of trading. And you've got to develop that. If you put this facade on where you make the market speed up all the time just so that you don't get bored, when you go to trade that market in real time, you're going to get messed up. For me, I overtraded because I was used to, I got this thing going at 1,000 times. I wonder if it'll go faster. Max. Okay. So it has max. So if I'm trading this on max on the simulator, then I never develop that connection with the rhythm of the market. And I get anxious. And I want to take trades. And I think that the market should give me more trades than it does. I get used because on a simulator like this, going at the max speed on the market replay, I can get a lot of trades per day. Right? And there'll be fast trades. But in real market environment, if it's a slow market, I won't. And I've never developed then that mental and physical ability to learn, okay, how do I react to slow markets? Either some people, they can stay there and wait until low volatility goes into a high volatility cycle. That's great. Other people can't. They just don't have the psychological aptitude to do that. And I remember one trader I knew who still know actually. And what he does is he knows that about himself. He had the exact same major problem I did, which was over trading. And so the way he dealt with it, a little different than the way I deal with it, but it works great for him, is that he had different software, but some kind of alert that until the market started moving, right, and it would go faster, faster, faster. He had a way of monitoring the velocity, the speed of the orders, and then it would set an alert, an alarm, and ding, 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 and he'd come back and trade. But until that alert went off, he would literally leave his trading desk. Would not look at it because he knew it was too tempting for him to go ahead and take trades. And great solution. So, hope you enjoyed this video. Hope you got some benefit out of it. One of the things that's really important is to have a solid trade setup. So we talked about kind of the psychology of trading today, and that's very important, but it's secondary. The most important thing in trading is to have a technical analysis structure, a statistical, mathematical probability based on the rules of technical analysis that actually work and have worked over a long period of time. Happy to give you one of mine absolutely free. It's called the rubber band trade. I want you to take this, no charge for it, by the way. I give you 5 videos that will demonstrate this trade, teach it to you, and I want you to go ahead and take this trade, set up, and start making money with it. And it's absolutely my gift to you. I want to get you making some money. But try it on a demo or simulated account first, but in real time.